Welcome back to Investing Talk Podcast. Today, we are zeroing in on a company that has, well, it's just rocketed up the charts lately, LightPath Technologies. And for you, the investor looking at this, the big question is pretty immediate, isn't it? Is LightPath Technologies a good time to buy now? Or, has this incredible run maybe gone too far? Before we really unpack the numbers, the charts, the strategy here, just a quick request. If you find this analysis helpful, please take a second to subscribe, maybe like the video, and definitely leave us a comment below. We're always looking for new ideas, so if there's a specific company you want us to look into for a future analysis, just drop its name in the comments. We really do read them all.
Yeah, absolutely. And our goal today is really to bring some clarity to that volatile chart action. We've gone through a whole collection of financial statements, technical analysis reports, market commentaries, all current as of October 14th, 2025. So we're going to step through all this material, try to give you a really factual, comprehensive view of the investment case here, and we'll focus quite a bit on why it seems like sophisticated money is flowing into this stock, even with a pretty significant financial paradox we need to get into.
Yeah, that paradox is kind of staring right at us on the price chart, isn't it? The performance has just been staggering. The sources we looked at show a 471% rally just over the past year.
Incredible.
And even if you just zoom in, like the last 30 days, still up an astonishing 62%.
It really is a textbook example of a momentum breakout. Seems fueled by some new conviction. The current price, $8.17, it's right near the top of its history, firmly challenging that 52-week high of $8.43. The low was $1.40, just to give context. When you see performance like this, a 471% move, you absolutely have to ask what's underneath. What's the fundamental engine driving this?
Okay, so let's ground it then. That kind of move, that valuation, it suggests they must have some kind of serious competitive edge, right? A real moat. What exactly does LightPath Technologies do that could justify institutions, piling in at these levels?
Right. So LightPath operates in a very specific and pretty hard to replicate niche. They specialize in what's called precision molded aspheric optics and also infrared components.
Okay, wait. Let's break that down. Aspheric optics, infrared components, what are those in plain English?
So think of them as highly engineered, very specialized eyes for advanced equipment. Aspheric optics. They're lenses, but their surfaces aren't perfectly round like a normal lens. They have special shapes.
Oh.
And this dramatically improves image quality. And it can also make the whole optical system smaller and less complex. Infrared components, well, they're used to see heat, essential for things like military night vision, surveillance, advanced robotics, even some medical imaging.
So definitely not commodity stuff.
Not at all. This isn't mass-produced glass.
Okay.
These are high-spec, often low-volume, but very high-value components. And their mode isn't just the design itself. It's the highly proprietary manufacturing skill needed to make these things perfectly, consistently for really high-stakes uses. Think defense, medical devices, high-end industrial automation.
Okay, that context definitely helps explain the high barrier to entry. Makes sense. And it seems the market sentiment backs that up. You mentioned the analyst ratings.
Yes. The sources noted the company has a rare, unanimous, strong buy rating from all three analysts covering it.
Unanimous. That's pretty significant.
It is. It suggests a really unified belief in, robust long-term upside from the professional analyst community.
And that feeds into the overall assessment from the sources.
Precisely. That analyst support directly leads to the overall investment assessment in the material we reviewed. The consensus view gives LightPath Technologies a bullish rating of 8 out of 10. And that rating is based on that combination of fundamental strength, the moat we just discussed, and the technical strength we're seeing in the charts, which kind of confirms institutional money is buying into this long-term story.
Okay, let's get into that core confusion then, because this is where the story gets, tricky. The revenue picture looks great. Fiscal year 2025, LightPath reported $37.20 million in revenue. That's a very solid 17.26% increase year over year. So, top-line growth, clearly accelerating. Pretty impressive.
And this is the major financial paradox you need to grasp. While that revenue growth is good, the net loss for 2025 actually widened substantially to negative $14.87 million.
Oh, wow.
So they're aggressively burning cash. The earnings per share came in at negative $0.36.
Okay, so how does that work? Up 471% in a year, unanimous strong buy ratings, but losing nearly $15 million. How are sophisticated investors okay with that?
Well, the sources explain this not really as a failure, but as a very conscious, high-stakes strategic choice. The company is deliberately prioritizing massive investment right now,
Mm.
pouring money into R&D, expanding their manufacturing capacity, trying to penetrate these markets further.
To grab that future market share in those high-value sectors you mentioned.
Exactly. They're intentionally sacrificing today's profitability for what they hope will be long-term scale and dominance in their niche.
Conceptually, I get it. Spend now to win later. But, I mean, eventually they have to actually make money, right?
Yeah.
What's the mechanism? How do these losses turn into profits down the road?
Yeah, the key mechanism is what analysts call improved leverage or operating leverage. Think about it. Right now, they have high fixed costs. The specialized factories, the R&D teams, the unique equipment for those aspheric optics. That's expensive infrastructure. They're sinking capital into that now. The catalyst for future profit comes when revenue grows enough to cover those fixed costs. Once they hit that critical mass, essentially every additional dollar of revenue beyond that point contributes much more significantly to the bottom line. Profit margins should expand dramatically.
Ah, okay.
That's the bet institutions are making.
Yeah.
Future profitability driven by superior operating leverage once the sales volume ramps up.
Okay, that focus on massive upfront investment makes the balance sheet absolutely crucial then. If they're deliberately running losses like this, they need the cash to survive it without hitting a wall.
Absolutely critical. And the balance sheet, according to the sources, is relatively resilient. That's what allows them to pursue this strategy. The company maintains relatively low debt levels and seems to have strong cash reserves. That gives them the flexibility they need to fund the R&D and the capital spending for this growth plan. And it's also worth noting, their current policy includes no dividend payments and no share repurchase program. So every available dollar is going back into the business, back into that growth engine. It really reinforces that strategic focus on reinvestment over returning cash right now.
Okay, so we've established the bull case really hinges on this strategic bet, betting on successful execution, future profitability. But how confident are the big players? Let's look at the charts again because institutional conviction, that usually shows up in the price action first. What are the technical signals telling us about who might be accumulating this stock?
Yeah, the technical picture is practically screaming accumulation. It doesn't look like just fleeting retail hype. There are hard technical indicators backing it up. The most crucial one, which actually happened on October 14th, the date our sources are current to, was the stock crossing decisively above its 200-day moving average.
That's always a big one for technical traders and funds.
A massive psychological and, frankly, operational signal for large funds that follow technicals.
And it's not just barely above, is it? It's significantly higher now.
That's right. The price is well supported. The 50-day moving average is around $5.90, and that 200-day is way down at $3.51.
Right.
That big gap signals that institutional support has likely established a much higher price floor recently. And the charts suggest a 3-month bullish trading range, sort of an expected zone between maybe $7 and $9. We're currently consolidating near the top end of that.
What about the risk of it just being overheated, though? I mean, that 471% run, is it due for a pullback, a correction?
Well, what's fascinating here, according to the standard technical measures in the sources, is that while the momentum is obviously strong, the stock is not currently considered overbought. The Relative Strength Index, the RSI, it's sitting at 58.7. That's comfortably in the neutral to bullish zone, not typically considered overheated.
Okay.
And furthermore, the MAMI-Z indicator, another momentum tool, shows a positive trend, which supports the view that this is likely an ongoing accumulation phase, not necessarily a speculative bubble about to pop. The technicals really do suggest the upward move still has underlying buying pressure behind it.
And that buying pressure, that takes us back to the institutions. Is this volume surge really confirmed as big money coming in?
All the signs point that way. The surge in both the share price and the trading volume strongly indicates accelerating institutional inflows. This momentum seems supported by sophisticated investors who understand and are willing to underwrite that aggressive R&D strategy we talked about. And actually, we're anticipating that the upcoming October 13F filings.
Ah, the institutional holdings report.
Exactly. Those disclosures are expected to confirm this increased accumulation by hedge funds, mutual funds, and the like. And that confirmation itself, when those filings come out, could actually act as another catalyst later this month. It sort of validates the move for the wider market.
Okay, let's shift gears then to the immediate future. What are the key things coming up that could push this stock even higher? And importantly, what are the big risks that could derail this whole bullish story?
Well, the most immediate, highest impact potential catalyst is the Q3 2025 earnings report that's scheduled for November 6th. Now, consensus already expects strong year-over-year revenue growth, But given the focus on leverage and that path to profitability, any beat on the top line, or maybe even more crucially, any raised guidance about getting profitable sooner, management confirming the investments are starting to pay off in efficiency, that would likely be a very high impact upside trigger.
Right. And beyond just the numbers, the company made some interesting strategic moves recently. Personnel changes, signaling maybe a bigger push into defense.
That's a key point. The appointment back in August 2025 of Mark Kaler to the board of directors. He's a veteran of the defense industry.
A deliberate signal.
A massive signal of strategic intent, yes. It strongly suggests LightPath is actively positioning for major growth in defense contracts. Their precision optics, especially the infrared stuff, are ideal for modern thermal imaging, targeting systems, guidance systems.
So landing a big defense contract would be huge.
Right. Oh, completely transformational. Securing even one major long-term defense contract would dramatically change their revenue profile, provide immense stability. They're clearly trying to leverage the high-value nature of their niche there.
Okay, and then there are the rumors. We have to mention them, but treat them carefully, right? What's the unverified chatter?
Yeah, you always have to be skeptical with market chatter. But there is persistent, unverified talk in some financial circles about potentially significant defense contract awards that just haven't been formally announced yet. Or other rumors, like a major OEM, an original equipment manufacturer, maybe adopting LightPath's newer optical solutions across an entire product line.
Big ifs.
Huge ifs. We absolutely must treat this as speculation. There's no hard proof in the sources. But if any of these kinds of rumors were actually confirmed, that could obviously drive significant speculative buying and maybe rapidly accelerate that timeline to profitability. It adds a sort of high-risk, high-reward element to the stock's current volatility.
Okay, now for the essential reality check. We need the balanced view. What are the major fundamental risks that the sources highlight? The things that could really undermine this 8 out of 10 bullish rating?
The number one risk, as we've kind of danced around, is sustained losses. The company absolutely needs to demonstrate a clear, consistent path towards profitability. If these net losses persist, especially if revenue growth starts to slow down unexpectedly, or if the costs of R&D and expansion run even higher than planned, that could seriously pressure the stock no matter how good the top-line growth looks. Institutional patience isn't limitless.
And with that ambitious expansion plan, building new capacity, entering new markets, there has to be significant execution risk, right?
Absolutely. Scaling up high-precision manufacturing like this, entering new regions, it's inherently difficult. There's always a risk of operational setbacks, delays in bringing new factories online, maybe issues with quality control at scale. That execution risk translates directly into financial risk. And finally, there's the ongoing risk of competition.
Even with their niche.
Even with the current tech mode. The optics field sees rapid innovation. Larger players, maybe with deeper pockets, could potentially develop competing technologies or processes. So LightPath has to keep innovating constantly just to maintain that edge. It's a continuous threat. So, okay, synthesizing all of that. The unique high-value niche, the strategic decision to invest heavily now for later gains, the strong institutional buying reflected in the technicals, the near-term catalyst like earnings. The final investment thesis coming out of our sources is pretty clear. The stock seems attractive for both short-term traders, maybe playing that upcoming November 6th earnings report, and for long-term investors who are banking on the company, eventually realizing significant profits from its unique competitive position and those structural growth drivers.
Yeah, that summary makes the narrative much clearer. The whole bullish case really hinges on believing that this exceptional revenue growth is just the leading indicator for massive future profitability, and that belief seems backed, for now, by that strong institutional conviction. But let me leave you, the listener, with maybe one final provocative thought as you consider LightPath Technologies and where it might fit. We noted their tech is essential for things like automation, next-gen defense, advanced medical devices.
Oh, right, major growth areas.
Exactly. And these aren't just cyclical trends, are they? These feel like multi-decade structural shifts that are going to reshape industries globally. So the question you might ask yourself is this. If LightPath Technologies can truly maintain its dominance in this specialized niche of precision optics, as these massive sectors like automation, defense tech, medical tech continue to expand and demand more sophisticated eyes worldwide, what does that imply for its ultimate valuation down the road? Think about the potential scale of those end markets they're supplying into and what being the go-to player in their specific niche could mean for their long-term strategic value.
That scale is really the crux of the long-term bet, isn't it? That the market they eventually capture will be so large, so profitable, that today's mega $15 million loss just becomes a footnote in their history.
Well, we hope this analysis gives you a much clearer picture of the current investment landscape for LightPath Technologies. Thanks for joining us for this look at the sources.
We'll be back soon with more insights from the market.